Hey friends, welcome back to the channel. So far, all the YouTube videos that I have uploaded are related to my investment. This week, one of the Telegram group member, LRM, asked what's my thought on ARKK for long term. I think this is a good question. I've been following ARK Invest since more than 2 years ago. I have some opinions about their style of investment, but it is not a structured one. So I took the weekend to organize the information and I would like to share with you. So today I will discuss about ARK Invest, specifically on the 5 ETFs offered, namely ARK. This is the mother of all ARK funds, focusing on disruptive innovation. The other 4 ETFs are more specialized. ARK focuses on autonomous technology and robotic. ARK focuses on next generation internet. ARK focuses on genomic revolutions, and ARK focuses on fintech innovation. Before we get into the details of ARK investment, first thing you need to understand is that ARK ETFs are actively managed ETF. An ETF is a security that tracks a group of stocks. It can even be structured to track a specific investment strategies. In ARK case, their strategy is to buy disruptive innovations companies. Now, what is actively managed ETF? Actively managed ETF is the opposite of passive ETF. For passive ETFs such as SPY, QQQ, managers of the ETF do not pick their investment. They will just buy all the companies that are in the S&P 500 or Nasdaq 100 indices, and the allocations just follow the index. They don't hire their in-house analysts. That is why their expense ratios are very low. Actively managed ETFs such as ARK ETFs, they have their in-house analysts. They study the companies and choose the companies that fit their investment philosophy and those that they think will do better than the market. Their goal is not to track the indices but to outperform the market. Let's take a look at ARK ETF's holding. This is the information that I obtained from a website called ktark.com. Link is in the description. The list includes the combined holding of all 5 ARK ETFs. Among their current top holdings are Tesla, Square, Teladoc, Roku, Zillow, and Baidu. Unlike passive ETF, ARK ETFs are also fairly concentrated. The combined holdings of the 5 ETFs have 162 companies. The top 50 companies account for 77% of the assets, and the top 20 companies account for half of the assets. When it comes to investing in broad market ETFs like SPY or QQQ, there is no need to look at the holdings to make sure that you like those companies before you buy it, because in theory they will own every companies. You only need to like the equity asset class. Oh yes, for these 2 ETF, you will need to decide that you like the US equity specifically. When it comes to investing in ARK ETFs, I would say that it is important to take a look at their holdings, spend some time to understand their investment philosophy. Because their concentration is quite high, there's a possibility that their ETF experience huge swing in the prices while the market is doing just fine. In those situations, you need to have some understanding on their investment and convictions to Katie Wood to invest more into the ETFs and still can sleep well. For concentrated portfolio, sometimes it is not enough by just looking at what they own, because you might look at Tesla, Square, Teladoc, and Roku and conclude that these are good companies to own. There are literally thousands of publicly listed companies that ARK could invest, but they only invested in 162 companies. To look at what they didn't invest, here I'm comparing their portfolio against ACWI ETF. ACWI captures large and mid-cap representations across 23 developed markets and 27 emerging markets, with a total of 2,964 constituents, covers approximately 85% of global investable equity opportunity set. The companies highlighted in yellow are invested by ARK, and the allocations are shown in the rightmost column. Here you can see that ARK didn't invest in companies like Microsoft, Visa, Disney, Samsung, MasterCard, etc. Even the FANG stocks such as Apple, Amazon, Facebook, and Google, the allocation are very small. These are not their core holdings. Among the mega cap companies, only Tesla, Tencent, and PayPal are considered substantial holding in ARK portfolios. By the way, if you want the full Excel spreadsheet, please join the Telegram group and reach out to me. Link in the description. Now, you must be wondering how ARK choose which companies to invest in. To understand this, we need to take a look at their investment philosophy. ARK invests in companies that are leaders, enablers, and beneficiaries of disruptive innovations. ARK defines disruptive innovations as the introduction of a technology-enabled product or service that change an industry landscape by creating simplicity and accessibility while driving down costs. ARK focuses on long-term growth over 5, 10, or 15 years. By the way, when you read their investment philosophy, pay attention to how many times they mention about long-term. I think this is 100% aligned with the investment philosophy that I try to encourage. Why focus on long term? In my view, it is easier to focus on long term than over short term. Long term focus means we only need to invest in solid companies because we know that they will do well. Time is our friend. If you focus on short term, you would need to focus on a lot more dynamic stuff. For example, recently people start talking about sector rotations to traditional sectors. If you focus on short term, then you will need to sell these good companies and buy airlines, tourism companies and oil stocks, which might benefit from the short term trend but might not necessarily perform well over the long term. Sector rotations only last short period of time. Let's come back to the ARK investment. It is worth to look at one example to better understand their thinking process. We will take Tesla as an example. Few days ago, ARK just released their latest price target for Tesla for year 2025, which has expected value of 3,000 and a bear scenario of 1,500 and bull scenario of 4,000 respectively. If you read the research done by ARK Invest, the bull thesis behind Tesla is not so complicated. First, they predicted that the battery cost will drop as the production of EV continues to scale up. According to Wright's law, for every cumulative doubling of units produced, battery cell costs will fall by 28%. The largest cost component of an EV is battery, so these cost declines are critical to reaching price parity with gas-powered vehicles. So they are expecting that a 350-mile range EV will be the same price as Toyota Camry in 2023 and cheaper than Toyota Camry after that. Next, they also expected that the cell-to-vehicle technology should enable longer-range vehicles at lower price points. This will significantly increase the attractiveness of the EV as the owners can be less anxious about running out of energy in their EV. ARK also believes that the EV adoption will go through the S-curve as the price of EV drop in the next few years. Within the EV space, they believe that Tesla has the best technology in terms of battery and also full self-driving. So for traditional analysts that pay a lot of attention to next quarter earnings or maybe up to 1 year ahead, Tesla is not an attractive investment, at least not at current valuation. In contrast, ARK is looking ahead the next 5 to 10 years and has no doubt on the EV adoptions and the full self-driving. So this is just a very simplified example on Tesla. Besides the EV and autonomous ride-hailing, ARK has a list of big ideas which are detailed in the ARK research report. I encourage you to visit their website to download the report and take a detailed look to see if you believe in their approach or not. Next, let's take a look at their past performance. Over the past 5 years, ARK ETF are just crushing it. Except for ARK-F, the 4 ARK ETFs are multi-baggers in 5 years. Let's look at past 1 year return. Similarly, ARK ETFs are crushing it again with returns ranging from 188% to 236%. These are definitely astronomical returns, especially for a portfolio of stocks. In the same period, SPY and QQQ are doing not bad at 62% and 76% respectively, but the returns are very low if we compare them against ARK ETFs. No wonder people are giving Katie Wood so many nicknames such as Money Tree, Katie Godma, and ARK Nuisance, or translated to ARK Goddess. If you look at the recent 1 month performance, because the market was jittery about the rising yield and also sector rotations to value stocks, some growth stocks were hit badly. ARK ETFs dropped quite substantially in the past few weeks. Since then, they have recovered slightly but still some distance away from the peak. So from these past performances, I guess you can see that ARK ETFs are much more volatile compared to broad market. Higher risk, higher return. So far, my review on ARK ETFs are quite positive. I think it's important to also talk about the risk. Specifically, I would like to talk about the liquidity risk. Let me elaborate in more details. This article from Wall Street Journal was published in February 2021. The writer was pointing out that when the funds get too big too fast, they often can't sustain their performance. He mentioned that ARK is already a big owner of some small stocks. According to FactSet, 43.5% of ARK total equity holdings are in stocks of which the firm owns at least a tenth of all shares outstanding. The question is that if ARK ever needs to sell any of those holdings, who will buy in enough bulk to keep prices from collapsing? From the Katie ARK's website, there's one column that shows ARK ownership. You can see that for these companies, ARK basically own 12 to 70% of the company. At this level, they are considered significant shareholder. Besides that, when ARK invests in one company, many other investors also follow ARK to buy them. So if ARK needs to sell, all these investors would follow ARK and expected to sell as well, and that would cause a huge drop to the share price. Here is the chronological narrative of what could happen. First, ARK experienced underperformance in returns. Then ARK investors are having paper hands and start selling. Then ARK ETF's prices are dropping, which then leads to redemption. Redemptions forces ARK to sell their stock holdings. Traders and hedge funds that notice the trend will then front-run the trades and short the holdings. This will result in ARK selling at depressed price. I know it sounds almost like a fiction, and to be honest, I can't say what is the probability that this could happen. Good thing is that Katie Wood is aware of such risks and she has a strategy to handle such situation. This is what she said. As market rise, ARK diversifies into larger companies. They form a kind of war chest that ARK can tap into during downturns. ARK counts on being able to sell some big stocks to buy smaller ones when those become even cheaper. During the sell-off in the past few weeks, we can see that these words turns into action. You can see that ARK increased their stock ownership for their highest conviction stocks. For example, Square, ARK increased number of shares held. Same goes for Teladoc, Zillow, as well as Shopify. So if you want to invest in ARK ETF, aside from the confidence on Katie Wood in terms of stock picking, you need to also have confidence that she will be able to manage liquidity of the funds. Being a fund manager is not easy. To conclude on this video, I would say that ARK ETFs are good long-term investment. I personally would rather invest in innovative companies and just watch these companies disrupt incumbent companies that are slow in their innovation. Like Katie Wood said, we need to stay at the right side of change. However, we also need to aware that some companies that ARK invest in are small and early companies that have not proven themselves yet. Hence, they are generally riskier than average companies. If you invest with them, please expect a higher volatility. Adopt a long-term mindset will help. As a disclaimer, I have not invested in ARK ETF. However, I own the shares of companies that ARK has invested in, for example, Tesla, Square, Teladoc, Roku, Twilio. For these three companies, Teladoc, Roku, and Twilio were bought not too long ago. I have to admit that ARK invested in them give me confidence to invest as well. But for me, the reason I chose ARK holding companies instead of the ETF was because I wanted to learn more about these companies and potentially make videos on them in the future. If you like videos like this, please like the videos and subscribe. And if you want to interact with me and other group members, please join the Telegram group, link in the description. Also, please treat this video as informational purpose only. It is not an investment advice. You have to do your own due diligence because it is very important. That's all for today's video. Thanks for watching. See you in the next one. Cheers!